I'm Conrad the mortgage man. My federal license is 1951251, based here in Southern California, licensed in over 25 states to originate, purchase, and refinance home loans. Now, what do you need to qualify for a home loan? So hold up your base. No, I'm not part of the Illuminati or something. I am a member of the Mortgage Bankers Association, but I'm not like Avenger. Spider-Man, though, you could. Anyway, the three things you need to qualify for a home loan is 1, a positive credit profile, 2, durable income, this is your ability to repay, and lastly, cash to close. Positive credit profile. For most home loans, FHA and VA credit score minimum will be about 580. For conventional, minimum credit score is 620. Now, some lenders at times can go as low as 500 on VA and FHA with some compensating factors. However, it is not just the score, but it's the complete profile picture that the lender is looking at. So let's look at some of those things in depthly. So 1 will be payment history. Payment history is simply paying your bills on time, avoiding 30-day late, 60-day late, 90-day late, 120-day late, and also derogatory remarks and collections. It's a huge part of your credit profile. Another piece will be utilization. This is what you owe divided by your total credit limit. For example, if you currently owe $300 on a credit card and the limit is $1,000, your utilization is 30%. You want to keep your utilization as low as possible. When you're sick, you have to go to a primary care physician. They run their tests to see what's wrong so they can diagnose you. When you take your car to a mechanic, they also have to run their tests so they can diagnose. They need to see exactly what's wrong and exactly what they need to do. I'm the mortgage doctor. I'm the mortgage mechanic. I'm Conrad the mortgage man. A positive credit profile. That is the first piece of the trifecta to get a home loan. The second piece will be durable income, which is the ability to repay. As lenders, we'll be verifying that you have sufficient income to meet the demands of the housing expense and all your other expenses. As such, working in the same job or in the same field for 2 years is most favorable for you. If you have other incomes you're using, namely child support, alimony, social security, pension, you need to currently be receiving those incomes and set to receive those incomes for a few years down the line. Durable income, the ability to repay, is the second piece of the trifecta. Now, the third and the final piece of the trifecta is going to be your cash to close. Your cash to close is your down payment plus your closing costs. So now on the purchase side, you'll have that down payment. With VA, you can put 0 down, so the down payment is optional. But for all the loans, you'll still have to pay the closing costs out of pocket. Now on the refinance side, there's no down payment because you already own the home, but you'll still have that cash to close amount. For most loans, you can roll the closing costs into the new loan. Here's an example of that. If you currently owe $200,000 and you'd like to take $100,000 out, your new loan is $300,000. Now, if your closing cost for this loan is $4,000, you can either subtract the closing costs from the cash out amount, or you can up the loan by the closing costs so you won't have to bring money out of pocket. Let's recap. The 3 things you need for a home loan are: first, a positive credit profile. Positive credit profile shows you have a history of being responsible. The second piece will be your durable income, which is the ability to repay. This shows you currently have the cash flow to sustain and make the payments on time. The last piece will be your cash to close. Cash to close shows that you're ready to go and you can get the deal closed. I'm Conrad the mortgage man.